Hey traders, welcome to Advanced Structure Identification. In this section of the course, we're going to be talking about how to differentiate between noise in the market and actual levels of structure that we need to be paying attention to. We'll also be talking about major levels of structure we can trade around, how to spot those, and the specific rules we need to use in order to do all of these things. Because frankly, trading around structure is one of the most subjective ways to trade. What does that mean? That means that there's a lot of confusion around it. It's hard to make rules, but we have actually created rules around structure to make this way of trading and to make structure identification very non-subjective and extremely rules-based. So throughout this section of the course, we'll be going over those rules and teaching you guys exactly how we do that. And traders, this is a foundational step in your trading success. If you don't understand trends and market structure, then you're going to have an extreme problem going forward. So make sure you watch this entire video, even if it's review, even if you know how to read structure and you know how to read trend, watch it anyway just as review. It's only about 20 minutes long, so it shouldn't take you an extremely long time to go through this content. Just set aside that 20 minutes and check it out, because again, it is an extremely important part and a foundational step to your trading success. So without further ado, let's go ahead and get into the training. So let's discuss a little more about structure. Let's imagine you're getting on a plane and you're going from Atlanta, Georgia, all the way to California. And I know you're probably thinking, what does this have to do with structure? But I promise it's going to make sense in just a moment. Let's say you start to take off here in Atlanta. As your plane's on the rise, you hit small amounts of turbulence on the way up, small amounts of turbulence on the way up, and then the plane drops 500 feet out of the air before taking back off again. And it does that once more. Tell me something. In this scenario, are you going to remember these tiny little moments of turbulence? Probably not, right? Will you remember these very large drops and moments of turbulence? Yes, you're going to remember those, right? Well, this is exactly how the market works as well. In order to spot major levels of structure, we can't be looking at these little tiny pullbacks that would be the small amount of turbulence you would hit on your way up to cruising altitude in a plane. What we want to be looking for is spots that the market's going to remember. Again, imagine it as a plane. What are the spots you would remember of turbulence if you were taking off an airplane? You want to find those areas, and that's where you want to draw your resistance and support lines, right? These are going to be the major and powerful levels of support and resistance. And we're going to discuss a few other conditions that we're going to apply to this as well. It's not just the fact that we have large moves down. Something else we need to pay attention to is the fact that in a trending market, trending being higher highs and higher lows, the very most important level of structure in a trending market is always going to be the most previous level of structure that was broken right here. So if we have a trending market, the most important and the most probable area you have to find an entry reason and capture a winning trade that's going to equal massive amounts of profits is right back at the previous level of resistance. Now, just implementing this could completely turn your trading around. This can completely change your trading. And why, you might ask? Well, because before now, you've probably been looking at tons of different structure levels in order to try to figure out what's major, what's minor, how are we going to trade around it? Well, what if you only looked at previous structure resistance that was just broken for possible support? How much more simple would your trading plan, would your strategy be if that was the case? Exactly. So not only this, what we're also going to implement, and what I'm also going to be teaching you guys today, is how to spot very important levels of structure that happen after consolidation. So the most important for a trending market, of course, is the previous level of resistance that was broken. Let's say we have an uptrend. The previous level of resistance that was broken is going to be the most important and most powerful level of structure we can find. Now, let's say we're at our cruising altitude, hit a little bit of turbulence up here. That's probably enough of the airplane analogy, honestly, so we'll just continue here. But then let's say we get this drop right here. If we were using the airplane analogy, we're heading down to the landing strip. After this drop, something we can pay attention to. Again, we're looking at the most recent level of structure that was broken. What's the most recent level of structure broken? Right here. But here we have even more power, an even more important level of structure. The reason being because this was previously a level of consolidation. We have multiple touches in this level. So once the market breaks through that, that's going to be a very accurate, a very powerful, and a very important level of structure to pay attention to for trading opportunities in the future to push the market down. And as we go into trend, what we're going to be looking for is just the most previous, nothing else, only the most previous level of support that was broken in a downtrend. So once we have that most previous level of support that was broken in a downtrend, we can place a horizontal line there. You can just watch it on your chart, wait for the market to get there, provide you some kind of reason for entry, and push back down. Now tell me something. Would that be a level of significant structure? Would that? No. These two levels would not be significant. You would not remember that as turbulence if you were coming down to the landing strip on your plane ride. And we actually need rules to try to define these, right? Or at least outlines of what these smaller levels are. We need outlines of what we can actually count as major structure support and resistance. The way I like to do this is if these little areas are 2 or less candles and they do not retrace a very large amount, let's say more than 38.2%, this way you can actually use a Fibonacci. So if this right here is not a 38.2% retracement of our high to low move and it's less than 2 candles, then this would not count as structure. So that's just a brief overview of how you would create rules for that. That's not something we're going to dive into in this video. It's a little more complicated stuff that we discuss over at the EAP. Okay guys, so since we've taken a look now at a broad overview of what we're going to be paying attention to when it comes to structure, let's take a look at some more detail about what we're going to classify as just noise in the market and what we're going to classify as actual structure levels. So if you look here with me on the New Zealand dollar 4-hour chart, we're going to use this area right here as our starting point. What we're looking for is this push down starting into trend, and what we need is a 2-candle pullback. We actually have a 2-candle pullback right here. We need at least 2 candles that provides at least a 32.8% retracement of that move. So what we have here, if we delete that one time, is a move from swing high down to swing low, and then we have our 2-candle retracement. That's what we're waiting on, is that 2-candle retracement. If we bring a Fibonacci retracement on here, and I can do this just out of experience without having to put my Fibonacci retracement tool on here, but when you're just starting out, you may want to do this to make sure you're doing this correctly. But what we're going to do is pull that Fibonacci retracement from swing high down to swing low. Now, although we have this 2-candle pullback, do we end up touching our 382 retracement? We do not end up touching that retracement. And let's go ahead and thicken this up because it's going to be difficult to see if I do not. So as you can see, here's our 2-candle green pullback in this trending move, but it did not touch the 382 retracement, which is our red line. What this means is that this is just noise in the market. This does not count as a level of structure, and this impulsive move or this leg in the market is going to continue down until the next time we see 2 in a row green candles. When's the next time we see that? Right here off of this swing low, we have these 2 green candles, that doji, and then 2 green candles leading up to right here. And this entire retracement here, if we pull a Fibonacci retracement from all the way up at our swing high down to our newly found swing low, does in fact touch the 382 retracement. So what we have is an impulsive move heading down and then the pullback that touches the 382 retracement, meaning that this is a legitimate level of structure and not just noise in the market like all these other little pullbacks throughout this impulsive move down. So that's the actual rules we're going to use to define levels of structure, because everything else in between here, all of this stuff before our actual pullback right here, everything in between here, all these little green candles pulling up, are similar to that turbulence that we wouldn't feel in the airplane because the pullbacks are not large enough. So all of this is considered noise in this pullback all the way down to our swing low here. And the reason this counts as a structure level and our swing low is because we get more than 2 candles pulling back, and this pullback does touch the 382 retracement. So now let's continue to look for this on the way down, and we'll actually go ahead and delete this and go ahead and draw some of this on. So we have this push down, the pullback up, another impulsive move down, another pullback up. Do we have more than 2 green candles on this pullback? Yes. Do we hit a 382 retracement? It's not hard to see that this pullback would have been more than a 382 retracement. Therefore, this level does count as a legitimate level of structure. As we push down, these little 1-candle pullbacks, 1, it's just 1 candle. 2, it doesn't make anywhere near a 382 retracement, so they would not count as structure. We pull back into our swing low, then we get more than a 382 retracement plus more than 2 candles. What happens next? We pull down and push up into a reversal. Now we've broken above previous structure resistance. Is this going to be a resistance level? Well, if we get more than 2 candles on the way down, 2 red candles, and we get more than a 382 retracement from our swing low to our swing high, then the answer is yes. So this is a legitimate level of resistance. Now we push up again. We break above previous structure. Is this a legitimate level of structure resistance? The answer to that question is yes, and the reason is because we have more than 2 red candles going down and more than a 382 retracement on the way down as well, pushing back up, then reversing once more, and now we get this pullback here. Is this more than a 382% retracement? The answer to that question is yes. I can tell without having to put a Fibonacci retracement on there just out of experience, and we have more than 2 green candles coming up as well. So let's talk a little bit about this. Here, is this a level of structure? The answer is no. We do have 2 green candles, but we do not have an actual pullback. So hopefully you're starting to understand this. I'll go through the rest of this market that we can see in order to help you comprehend it, but this is a pretty simple concept. It's just a really set in stone rule that we can use in order to define levels of structure, because one of the most subjective things in the market is structure levels. What counts as noise and what actually counts as structure is a question I get asked every single day by traders. So this should help to clear that question up. Now let's talk a little more about major structure. Okay, so now let's talk about how we can use what we just discussed, the rules for differentiating levels of structure from noise in the market. We're going to use that rule to define major levels of structure that we can trade around. So a really important thing to remember here is that in order for this pullback that's 382%, that's also got 2 red candles in this pullback, if we're in an uptrend, in order for this to be a major level of resistance, it has to be broken. What this does not mean is that we're looking here, if the market's in an uptrend, we're not looking here for a trading opportunity. We're not looking at this major level of resistance as a possible place for the market to be pushed down. We'll talk more about that in the advanced section, more about counter trend trades. But again, throughout this section and in through our transition phase, we're just looking at trend continuation trades. So in order to trade for trend continuation, this level of resistance after our pullback to create this as a major level of structure has to be broken. Once it's broken, then it becomes a major level of structure, but only as support when the market's pulling back again. So now this level has become major support, and we expect it to push this market up. Yet again, we have our 2 candle pullback, more than 382% retracement, giving us a major level of structure resistance. And once that major level of structure resistance is broken, then when looking at a market in trend, we use that as a major level of support that can support the market and push it into higher highs. We'll do that one more time. We have more than the 382% retracement here to this structure low, pulling down, and we have more than 2 red candles in that pullback. Then that means that this level right here is major structure resistance, not to look for shorting opportunities from, but once broken, to look at for possible support. And that's what we're going to be talking about when it comes to major structure in this section of the course. And that's really what you need to be paying attention to for this section. But just to give you a brief overview of major structure levels, we will also talk about the other major structure levels as well that we're going to discuss later on in the course. Just to give you an overview, don't concentrate on these too much at the moment. But what we're going to have as well is, say a market's in trend, this level that we broke, let's say we have our 382% retracement plus our 2 candle pullback, making this a powerful level of resistance after broken to become support. What we're also going to look at is the most previous support level after this resistance was broken in trend. These are our 2 major levels, and this is something we're going to discuss later on in the more advanced sections of this course. Not something you really have to pay attention to at the moment, but just to give you an overview of something we're going to be looking at, this is also going to be classified as a major level. So we have 2 major levels of support that we're going to look at during an uptrend. These would also be resistance if you flipped this upside down in a downtrend. So if the market pulls back to here, then what this means is that this is a pretty high probability zone to get some kind of trading opportunity from. If the market pulls all the way down to this previous level of major structure support before the market broke past this resistance level, then that's also going to be a pretty high likelihood to look for possible trading opportunities. Now, if the market gets all the way down to here, I wouldn't necessarily think that this market's going to be in trend continuation, but would expect some kind of bounce maybe to bring us up to previous structure or something like that. Again, this is something we're going to discuss later on in the course. Just wanted to give you guys a brief overview of it right now. So also, one more way we're going to be looking at structure is a level of structure that's tested multiple times. What do I mean by that? We discussed this a little bit earlier in this video, but if we have a trending market, and let's say we do something like this, pulling back up to this level right here would give us a really accurate and a high probability zone of placing a trade from. And the reason for that is because we have not only one, but two levels of structure that were previously tested. And again, guys, later in the course, we're going to be talking about multiple time frame analysis that we can use these kind of principles on. But for now, just focus on the trend continuation from the beginning of this video. And what we're going to do now is go down to some charts and actually take a look at this happening on real price action. And we'll discuss a little more about major structure throughout the rest of this video. So let's take a look at this actually happening on price action. Right here, we're on the dollar Swiss chart. And what we have is our move up, right? We have a starting point here. The market pushes up. This would be our impulsive move and our pullback. And the reason is because this is where we have two red candles that pull back plus more than a 382 retracement. If I bring on a Fibonacci tool, you'll see that from our swing low up to our swing high, we get that red line hit, which is the 382 retracement. Now, why was this not a level of major resistance? Well, because this is only a one candle pullback. Remember, we need at least two candles. So we get this move up, swing low to swing high, making this a major level of resistance because of this pullback here, and then we break above it, right? Remember that concept. We broke and closed above this previous level of resistance, making this major after the two candle pullback and 382% retracement. So now that we've broken and closed above it, that's a major level of resistance that we expect to do what? To support the market and push it into new highs. And that's exactly what we got. So there's a really good example of what we're looking for when it comes to trend continuation out of markets. Now, what was the other thing we talked about we're not really necessarily paying attention to during this section of the course, but just to show you guys an example of it, the market has just broken into new highs, breaking above this resistance level. This is the most previous level of support that the market had before breaking above that previous high. So what does that mean? That means that this level is also going to act as major support and be a high likelihood place to look for trend continuation out of a specific currency pair. So with that being the case, what did we get? The market pulled back into our high likelihood zone, pushed up, pulled back once got to resistance, and pushed up into new highs. Now that we've done this, is this a major level of resistance? The answer is yes, right? This was more than a two candle pullback. This was also more than a 382% retracement from our previous swing low to our swing high. So to do that with you, let's say that we have, this is our impulsive move, right? From swing low to swing high. Well, what we have to do is see if there's two candles that pulled back. There is. And also we have to draw on our Fibonacci retracement, which is very obvious that this was more than a 38.2% retracement. But just for argument's sake, as you can see, we came down way past our red line, making this a major level of structure resistance. Once broken, what do we expect out of that major level of structure resistance? While in trend, we expect that level to support the market and push it into new highs. And that's exactly what we got here out of the dollar Swiss. So that's what we're going to be looking for when it comes to trend continuation out of these markets. The most accurate place to start looking for opportunities in the market is its previous level of structure that was broken. And if you'll notice something else, guys, this also falls into the category of being a multiply tested level of structure. This level acted as resistance, and support back here. So throwing in another example of something we discussed earlier that we're not really paying attention to during this part of the course, but that we'll talk about later on in the advanced section. Of course, for now, just pay attention to the trend continuation concept that we've been talking about. And hopefully throughout this video, you've gathered all the information you need to create rules that make your structure-based trading extremely objective, meaning that you're not going to be guessing anymore in the markets going what levels are major, what levels are minor. Now you'll be able to understand, one, what trend the market's in because of the previous video, and two, what levels of structure you need to be paying attention to because of the concepts we've talked about in this video. And these are the rules that I actually use in my own personal trading. So again, hopefully they will benefit in helping you better understand the way the market moves. Now that we've went through all of this about price action and structure, we've got all the basic things down that you need. You have a great foundation to start learning how to create a trading plan, to start actually creating strategies and creating a plan around your trading, which is our main goal because that's what's going to lead you to profitability. So now that we have this information intact, there's only a couple more videos in this basic series. The next one is going to be introduction to indicators and how to use them correctly, where we'll talk about all the indicators we're going to be using throughout this course and how we're going to be using them. And then finally, we'll talk about the one very simple candlestick pattern that we're going to be utilizing in the strategy for the transition phase. So go ahead and move on to the next videos in the course, and I'll see you guys there.